Hello winners, are you struggling with finding confidence in your Forex trading? Well, in this video we're going to go through tips and tricks and ways of how I found confidence into my Forex trading. Sound awesome? Awesome. My name is MINDBLOWING, Forex trader, economist and mentor. If you want to join my Discord channel and need my help, link below. And also I would advise you to reach out in the comment section if you need help. Then this video is a conversation between me and a student where I give him my advice on various conversation topics that he wants us to discuss. So, trading Forex is risky, not appropriate for everyone. Past performance is not indicative of future results. That means whatever money you invested right now can be lost tomorrow. So don't risk a lot and don't risk money you cannot afford to lose. Join in.
What can I help you with in improving your trading?
Okay, well, you can. I just need a proper way of guidance, and to be honest, that I don't feel like that much confident of entering the markets. Basically, I just need like good way of building up my confidence and building up with the knowledge, like getting confident with the knowledge and together with the markets. Even like someone like mentor like you, like Rainer, and I look at every time his videos. Even Maria, I look at her videos, and I learn from it.
Okay. Yeah. Lack of confidence comes from various places. It comes from lack of experience.
Yes.
It comes from high on emotions, as in you want this to go in your way so that you put everything into it, like your whole mind and everything, and once it goes against you, you lose confidence in your trade. You're like, no, this goes against me, and then I'm closing the position, cut, but then it turns into your direction. And lack of confidence also comes within my point was the instant need for profit, and it just needs to just fall in your direction instantly. Right? And then if it doesn't, and also the understanding that the price moves in waves, bigger and smaller. I don't know how many waves there is in one wave, but everything goes in waves, so there's always a pullback, but you don't know how high on which wave you're on. So that's why I have plan A and plan B, just in case there was a better plan or a better price higher up before selling, right? And this comes with experience. For me, I've been alone trading for 5 years, just sitting there alone. I have nobody to ask. But for you now, you have somebody to ask. And I can tell you from my experience, it's all those hours that really made, I don't know if my confidence really came today or the last month, but it's a process. Okay?
Yes.
You as a trader, if you started a month ago, I'm not saying you did, but if you did, you don't have the experience of what has happened in the financial crisis in 2008. You can look into it, but once you see the price falling, rising, falling 1,000 pips, we don't see that. We haven't seen that yet. But once you see a fall of 1,000 pips, it humbles you, and you know that there is a possibility of everything just going against you. Okay.
Yes.
And so the confidence, how to create confidence is, one, doing the same thing day out, day in, having a trade plan, sticking to the trade plan, but also maybe asking for a second opinion from somebody that has your same system, so that you through them also have a second opinion. You also need a plan B. That can be stop loss. That can be a second entry. Okay. So for me, at least in the beginning, I don't know about you, but in the beginning, if plan A didn't work out, I would lose confidence, but plan B would work. Not always, but that would also work.
Yes.
So I would just cut loss at 50 pips, go away, and price will go in my direction.
Yeah.
And then, I don't know, you haven't talked about that yet, but that creates FOMO, fear of missing out. You start chasing price because you're right, then you start running after it, and then you lose again because then another pullback comes. So
yes, you missed the position. Yeah.
So you lost twice, one on the first entry and entry B, then you lost 5.
Yes.
Then you lost because you chased the price, wanted to have the position and get the money, and then you took it at the bottom. Let me see if I can share my screen with you. I think can do that one again.
Actually, this happens, you know why? Because what you shared right now. So I look at the charts like this, and it really happens like that. Okay, because I plan to my Excel sheet. Then I look at the markets. Okay, this is my stop loss. Okay, it already hit. Okay, let me chase again. So I don't trade, but I look at it. So this is how it happens, that my confidence gets a little bit lower. It doesn't build up. Yes.
So just take Australian dollar, which date it is today? I think it's 16th. So this is very, very recently. So this is just 2 days ago, right? So what I would normally do, I didn't do that before, but I would normally say, since this is support, it can potentially turn resistance, okay? And then this one is also support up here. This can potentially turn resistance. And then up here, that has been resistance, it can potentially do it again. So then I would just sit for myself. I would do this in demo though in the beginning. I would say plan A, plan B, and plan C. And then I would say, okay, this might be a bit too aggressive. So I would go for plan B, because that's what I would normally do. And once the price doesn't come to a price, I would start getting fear of missing out. I will start chasing a price again, right? But for you, my point is, yes, it's good with a system. It's good to write it down, everything. That's super awesome. But the market is, I don't know what to call it. I don't know how many variances of the same things. So you can have no. Some point is, you know which variance it is each time. So it can be no pullback at all. It can just go dunk. It can be this pullback. It can be this pullback. It can be this pullback. You don't know. Okay. So, and also if you say, oh, I'm going to have 50 pip stop loss, but price went 51 pips. So it has to be founded on experience. Is it because I don't know, this is conspiracy theory, but I feel like the market knows that 50 pips is normal. So it normally goes 50 pips. And then I'm a mindset, okay, if the 50 pip stop loss is haunted sometimes, why not have an entry at 50 pip stop loss? Okay. So for example, once okay, we can take this one. I don't know, this is just taking it. Okay. Yeah. I would say if I bought up here, I did go a bit closer in. Can you see my screen?
Yep, I do.
Yeah, okay. So if you say, okay, this is high, but I would wait for a pullback that is greater or around 50 pips. So instead, I would lose money up here and say, no, it goes against me. And then it went with me, and all those profits I lost. I started gaining confidence in that.
Okay.
And that's actually the beginning of me realizing how to trade better. Because you say that, you know, in a trend, you just buy the pullbacks. Okay, so I would say that's a pullback, but that's a very high pullback. And then I started realizing much later on that there's also targets. Okay, so this is a green book. This is a target for that week. And then I started realizing, okay, there's a target. How can I get to target? So that's how I together started realizing once it's very near the target, don't buy it again, because then the Pandora box opens. Once buyers in a buyer market takes profit, anything can happen. It can go up, it can go sideways, or it can fall like a ton of bricks.
Yes.
And especially on Monday and Tuesday, if this green box is on Monday or Tuesday, like on Sunday open, just goes straight up, then it's potentially going to fall much more during the week because buyers is gone. Okay. So sometimes it's not necessarily sellers selling, it's actually buyers taking profit, which creates sell pressure because they need to sell it to somebody. So that's how I started realizing, okay, there is sometimes greater pullbacks. I need to be at the end of that pullback instead of being at the top or the beginning.
Top of the pullback. Yeah.
So to create confidence, in another way of doing that is through technical analysis.
Yes.
Just observing, taking notes. Okay. And then there's a million ways or variances, I don't know what you want to use, of how an uptrend can look like. You don't know which one it is. And it can be kind of a normal A, I don't know what you call it, I would just call it something. It could be a normal uptrend of A, and then the next variance can be a B or C or D. Like if you categorize them, if you become really systematic of how you look at uptrends. And also in the beginning of a new trend, it's normally very aggressive with minor pullbacks. As you come higher and higher, there's more and bigger pullbacks.
Yes.
Yeah.
The thing is, the more higher it goes, the support needs to make the same way it needs to come down.
But also, I don't know how you have learned this from me or from anybody else. I can tell you now. Professional traders, in my mind, is not afraid of losses. They're afraid of losing profits. Okay?
Okay.
Listen to this one. So if you, in this market, I'm just going to remove those previous ones so it doesn't, I can hold that one. If you entered down here, okay, this is your entry. You have a double bottom, higher high, higher low on 1 hour. Okay, fine. Just say you entered here at 60.13. From 60.13, your target of 62.20. Okay, at this green line here.
Yes.
Then price comes up here, but doesn't go to your take profit, but it just stops. I don't know how many pips it is, but I guess it's 10. That was a wrong mouse. I guess it's 10 below it. 13. Okay, so for you, you already have at that point 190 pips in profit. Are you then going to lose 80 pips, which was the move down?
Yes.
For 10 pips? I didn't see a move of 300 pips, but you lost 200 pips because you were fighting for 5 pips. Okay? And this is where the fear for professional traders comes in, as it nears their target, are we going to take profit now, or are we not? I don't know what. That's where the anxiety comes in, because they have demand for results. They need to perform in a certain way, do it again and again and again. But so that's the fear point, not where it goes against you, because you have stop losses and you have proper risk, and you didn't lose much on that trade. But once you have 200, almost 190 pips in profit, you want to keep that.
Then
But eventually it went higher. But so what I wanted to say was, since we're into professional traders and how they do, they see news as opportunities. For example, what retail traders, those who have less than, I don't know what you call it, $500 million in management, they fear news because it normally makes or takes their profit away and exits the trading loss. But news is actually events or volatility, because you need volatility. If you don't have volatility in the market will just be like that person. It will just be one line. But when you have volatility, you have possibility of making profits. So they want volatility. And what creates volatility? News events. So NFP, CPI, interest rate decisions are events that make their position go in their direction. So for them, they exit before an NFP, for example. NFP was one of the most volatile events. It's no longer anymore, or it's nowhere close. Before, I don't know, what was it 6 years ago? Maybe it was like 200 pets move. Now it's barely 50. Now it's barely 50. So I think that's because of robots or algorithms. But then would exit before. But then once they wouldn't trade the news event, they trade the content of the news. Okay, is the news positive for dollar, or is it negative? And then they would, with their bias, trade the aftermath. Okay, let's say an hour or two once it had set, maybe on Sunday open, then they start entering. Right. So they would have a much lower risk in their trading, but still make profits. They don't know how the market will go. They don't know the number.
But they wait for it to take a decision, it take a move, and then they take their move.
They take the move much later on, because the reason why, at least it used to be, the reason why NFP moves is because they lack, not the amount of traders, but the lack of traders. So the lack of liquidity, the lack of money in the market makes price move faster to find entry points. Okay, if you buy, somebody needs to sell, and if you can't find a seller, the price will go up and up and up. It will cost you more, right? Or if you're a seller, you need to find a buyer, and then it will go, I think it's go down until they find a buyer, right?
10 seconds later.
You mentioned in the beginning that you would look at the trend. And then determine if you're buying or selling. Okay, I have a problem with that. Because every Monday or Tuesday, I would say this could potentially be bullish, this can be bearish. I don't know. It can turn both ways. It all depends on what you look at, how you look at it. Okay, for example, I don't know why this line is here. But let's see. So this is Monday. So this is Monday, okay? That's a new low. That's for me a new low and a new lack of a new high. That's a sell. Okay.
Okay.
For sellers, this is now turning bearish. This is now turning lower. This is now showing weakness. But then for buyers, on the other hand, then for buyers in the very same market at the very same time, they see this is a pullback to this area here, so I want to buy it up.
Yes.
Just by looking at this box here, you have two very different views. Okay? And then for this downtrend here, you have, let's see. So here, as a seller, this is an entry point to sell. Okay? You want price to come back up to resistance so you can sell it.
Yes.
But for buyers, this area here, because this is what I do, double bottom, higher high, higher low, that the golden rule, you buy.
You buy, yes.
So here sellers sell, here buyers buy, but you don't know who will win. Okay?
Yeah.
Both are correct. Both are doing their jobs.
Yes.
But who is going to win? And then the buyers won. Okay, fine. But you don't know that ahead. So for me, I would rather see that you choose either to be a buyer or a seller in any market, because there's profit for both of you. Okay, buyers got some profits, and you got here maybe break even, maybe something done here. I actually, what did I do with this one? Did I sell it?
Yeah.
I think, I sold this one. Okay, so I got here.
Yeah.
I didn't lose anything, but I got out. Because I saw this was a bullish move. And then I sold it back down, where are you?
Yesterday, today morning.
And then I sold it here again.
Yeah.
And here. So, for me, that's okay. Then that's now bearish again. For me, as a bear. But as a buyer, they would say that's definitely support for them. If when they get a new high and a pullback, they will start to buy again. Something like that. And I would look for a new low. So it's like choose your battles on one team. Are you Manchester United or are you Arsenal? Are you Liverpool? You can't be all of three at once. So once you choose to be a seller or a buyer, stick to it, because this is my experience, I've seen increased profits because it made me less confused. Okay?
Yeah.
Am I going to be a buyer? Am I going to be a seller? I know if I'm going to buy or sell before I open the computer. Before I open the computer, I know what I'm going to do, when I'm going to do it, how I'm going to do it, before I look at any charts.
Okay.
I know that if I get this move here as a buyer, I'm going to buy it.
Yeah.
And if I get this move here and sell here, I know I'm going to sell. I'm a seller.
Okay.
But if I'm a buyer, if I'm a seller, I don't know. Maybe. Should I? Maybe not. Sometimes.
Yeah.
So
you need to decide first that you should be a buyer or seller. That's what I basically do with the trend. If I see the trend is up, then I decide to, as you see here, it's on euro dollar on like on Saturday, Sunday, the market was closed. So I was basically deciding, like, let me look at the markets, let me like try to make decisions how it goes. Then I made a decision that the trend is going up. So I will buy when the market retraces back to 1.9 or 1.89, 0.89. Yeah, maybe yeah, here somewhere down. So then I would like, it didn't hit my position because I was buy on 1.89, but it didn't touch there. It just went from, it just like very close and it went up.
Okay.
So I was like, yeah, because on sellers, I on my Excel sheet, I saw that, yeah, that was like literally close. If it would have hit there, then it would have gone up. But
Okay.
then it went up. Then yesterday it turned very badly. It turned down.
Yeah.
Yeah. So I had a take profit at 1.9. Wait, sorry, just a minute. Yeah, I had a take profit at 1.1, below that, like in between 1.0990 and 1.1.
1.1, so 110.
Yeah.
Okay. I think I said Saturday, Sunday, Tuesday, Wednesday, which is yesterday,
Yeah. Yeah.
that this is going to sell.
Yes.
So I said it 4 times before that, or 3 times before that.
Yeah. Actually,
I don't know. I just said it was going to do it, and it did. I don't know. The thing here is,
yes.
it was forecasted, and then all of a sudden, like, it happened.
I don't know where my mistake is. Like, to actually, I know
So-
that at one point I was right that I stick to my plan, but this turning point I never like forecasted, or it never came to my mind, because I just one where that, okay, the market is in uptrend and okay, I have to go buy, and yeah, that's how it went.
So, but let's be honest, you were right.
Yes.
You're right about your entry. It was you were a bit too low. Okay, that's one of the
Yes.
variances. It doesn't normally necessarily touch. But I
Yeah.
would rather say this up here is actually your resistance. But also, I don't know.
Yeah.
Yeah, okay. So entry was at around 888.
Yeah.
So yes,
0.89.
it didn't come down to the buy price for the week. So
Yeah.
technically, weekly, you didn't get an entry,
Yeah.
which is fine.
Yeah.
So I don't blame you for
Yeah.
not entering. I think it's a good deal. I think it was a good price action is good. Everything is good. The only thing that you might need to understand is, when are you wrong? So when price starts falling, it's falling, it's falling, it's falling. When do you think you are wrong? Short term, long term, any term. Once price breaks below previous support.
Yeah.
So that means this candle here, that red candle there,
Yes.
that's when you have to stop out. That's when you have to get out your buy position.
Yes.
And that's also why it's so strong, because I guess there was a lot of SLs, at least professionally, should have done that. And then there was the other ones, the retailers, was done here maybe. But you need to acknowledge, when it goes below your support, it's no longer an uptrend, okay?
Yeah.
So and then for the bigger move, if it goes below 1850 ish, this area here, then it's no longer bullish.
Yeah.
When the price is here, okay? But now this low was made, and this new low was made yesterday. Now it's no longer bullish. So this is the day trade. This is the week kind of. So once it just falls like that, you're just get out. Once start breaching with the candle, not just temporarily, but actually with a closed candle with a closed body. Very specific. Not just a wick. A wick can go below, fine. And it can go back up again, fine. But a closed candle below previous support, down to 1, 2, 3 maybe. Then and that for me, it's like, okay, you can then get out and then wait for it to make a new high, If it just went like this and then made a new high, then you can re-enter up here. But you saved yourself a lot of pain, because if this just continued lower,
Yeah.
you didn't join that train. Okay, like understanding when to jump on the train, jump off the train. So yeah,
I didn't. Yeah, I got my mistake. That I didn't decide when. If like on the second side, I didn't decide that
it wasn't a mistake.
Oh yeah, that's the thing I need to correct.
It wasn't a mistake. You're right. You did everything correct. Price is just the market didn't do what you wanted it to do. That's nothing with you.
Yes.
You're totally perfect.
Okay.
You're totally awesome.
Yeah. Yeah. Okay.
The market was just a bit more bullish than you expected. Fine. So what I say sometimes, you need to make plans for the market to come to you. If it doesn't come to you, leave it. Leave it.
Yes.
But hopefully you're left. So, and then once it makes a new high, you wait for the pullback, and if you enter here, okay, fine. But it then went stop loss. But another thing here, I guess also I can do for you is a new trend. What one is the most risky to enter a new trend? Okay, this the bottom higher, low, around the price that would be expected. This move, this is, we can call it A. This is where, is it 5% of the market enters? Okay, at the first pullback in a new trend. Second, then you have 5% again. I was trying to make a B on 5 apparently. So this is 5. But then at the third time, sorry, the C, when it's very clearly uptrend, that's when the majority of 90% enters the market. Yeah. And it falls. It falls like. So that's why retail traders are always late, because they enter at this C here. They really need a market that had really turned around and is now trending, instead of being there at plan A or mostly at plan B where you were, which is fine, totally good. Yeah. Also for the downtrend, so plan, what I was here, and then maybe plan C becomes, I don't know, this one or this one. So you still got some profit if this was your C, either this one. Yeah. But it was very late. You know, for me, I'm already 50% into the new trend. Yeah. Yeah, that's 50%. I'm already 50% in. Of the 300 move. I got 300, you got 150. So another thing that comes into mind is, how does a trend change direction? Yes. I just showed you. Double bottom, higher high, higher low. And it doesn't, it's not like, and there's some other criteria. Another criteria is, it has to be a monthly pivot for me, since I use pivot points, or it has to be a round number. Okay. Okay. Like it can't just be just in the middle here, like 0.7261, but around I was actually quite okay, around 0.8. That's not the low, but it's around 0.8. Okay. Then the turn downwards was around 110. That was where I would expect it to start falling. Okay. Okay. So those are the two numbers: whole number 108 and 110. Yeah. 00. And also starts of the week, no, start of the month or mid-month is also very important. Actually, if you're a buyer, you have a long wait, my friend. Now you can't do anything until May. Yeah. Well, I guess there will be some small moves every week, maybe every day. But now we are on a bigger downtrend. It's it's like jumping in front of a train trying to stop it. And once this now breaks 108.50,
Yeah.
where it's right now ish, I
right
believe
now it's
we're making a low anyways. So, or yeah. So I guess
if it breaks the support,
yeah, if
so
it breaks
then
the
it's
support,
gonna go down.
Yeah, and it's going to
Yeah.
go down once it breaks the support
To the previous the third support.
But also once you break that support, you also need
Confirmation.
You also need a new double bottom.
Yeah. Okay.
At a critical support, beginning of the month, mid-month. So the next time now is actually the beginning of May. So end of April and beginning of May. It doesn't need to be like first specifically. It can be 27th to 3rd-ish. I would say that's again.
Yeah.
And then you need a real reversal, double bottom, or something. So I guess it trends down now once, and if it breaks below. You can also, to me, my plan B here is that it goes a bit like this and then fall on Monday. I just have to be ready for that. But yeah.
Yeah.
The stop loss is up here.
Yeah, I have the same there. Like, oh yeah. To be actually, I do reduce my stop losses when, like, I say I'm on profit right now, so I reduce like at least 1%. I usually keep my
You reduced it by 1%.
Actually, no. Actually, the thing what happens, I know that you have to like 1% risk. Yeah, so I just make it like more. I risk more stop losses. Like I told you today. Yeah, I do 3%. Yeah. So then what did I do? That okay, that's 3%. I need to cut. Like, I'm on profit right now, so I just made like 1%. I minus 1%. So right now it's 2%.
Yeah. Okay. Yeah. Okay. Yeah. Of course. Of course. It's for me. It's a bit humor to react to other people's stop losses, because I have my rules, which is from me, and I'm trying to give advice of people to have low stop losses as well, because I know that it takes more time and money to gain back the lost. It's very easy to lose it. And if you're wrong at 1%, why do you lose extra 2%, for example?
Yeah.
Right. So if you have a very large stop, I'm not saying you have, but if you have a very large stop loss and you were really wrong earlier on, you can cut your losses by reducing. But of course, it's just generally. But also,
actually,
also, it comes down to your account size, and I can't make you have 1% loss if it doesn't make. So what really has to be the basis of any stop loss is previous structure or previous high or previous low. Okay, so if you enter here, your stop loss should be down here.
Yes.
If you sell here, you should be about here.
Up there. Yeah.
Actually,
I learned this on the strategy when I was reading the books, and I saw a video. I was looking studying the videos. So actually, I like doing that. I like learn myself. I like see how it goes. I like doing that. So I'm still learning. I less experience, like not less experience, but like no experience. This is the first step to gain experience. Yeah.
But even I myself am learning. I'm still learning myself. I don't think I would ever be. Once you stop learning, you're dead. You're dead.
Yeah.
Like I will. There's always something I need to learn as well, and even though I've been trading for many years now, I'm still hunger for more. I need to be hunger for more, because once I stop being hunger for more, I will lose. I will lose again.
Yeah. Actually, it's like it's really good thing to learn this. This thing is. I saw this video and said that if I don't know, I think Rainer or probably you or Maria, someone from YouTube said that. Because actually, what happens that I see so many of videos, so that so much knowledge is so much built up in my mind.
Yeah.
So that gets exhausted then. So I need my brain to rest and okay, take some time, go just play some music, read and do something like crazy, then come back and apply it. Yes, they say that don't make this as a just like random stuff, but make this if you're so much interested in this, so make this thing as a business for yourself, and you can like really learn from it, and you can go further. So I'm just trying to make something like that built up in my own self gradually.
Yeah. I haven't said I'm not so much into personal finance. I'm very agree with whoever that was. I haven't really said that so much on YouTube. Maybe my communication there is not so great on that point, but yeah, I highly agree. I would have said it myself if I did, but I haven't. But yeah, Forex is a business and it should be treated as such. And losses is expenses and lessons and knowledge, and you get knowledge from it. And you as a business owner, you need to cut your losses, yes, but you also need to learn from your mistakes.
Yep. 100%. I agree on that.
You don't know 10 months ahead once you start going to China, where you buy your goods from, and what the price will be, at least now in this coronavirus times. You don't know what the prices will be, what will the demand be. You kind of just picking something that you would believe will be trending in 10 months from now. Hope it goes well.
Yeah.
And then you learn from that, was it right, was it not? I know that for toys, for example, they don't know, they just buy, not that much, but they have some kind of knowledge, some kind of general feeling and the gut feeling of what will be popular in 10 months.
Okay.
And then they buy in the goods, they sell it, something flops, something becomes very popular, and then in the end, you have learned your lesson. For example, do you know spinners?
Oh yes, fidgets.
Yeah, they just become popular overnight.
Yes, overnight.
And now they're gone. But somebody saw that coming, and somebody was too early, somebody was too late. But how do you know in 10 months, spinners or fidget will be the most popular thing youth will do for the next 2 to 3 months?
Yeah.
You don't know that.
Don't know that.
So that's the same with the Forex market. You don't know what's going to happen in the next 10 months, but you have some general knowledge. You will trade your setups. You will do this and this and this and this if this happens. And if it doesn't go your way, you cut your losses, you go and you leave, right?
Yeah. Yeah.
What's my analogy?
That's cool.
My analogy is tomatoes, I believe.
Am I going on the right track?
Yeah, you're not wrong. At least not now. You're not wrong now, at least.
Yeah.
But what is your knowledge in fundamental analysis? It's a big word.
Fundamental analysis, like the tech. Sorry.
Central banking policies. What makes the market move? Which currencies move together on which news? If I said, okay, you would have to tell me now kind of what you know about this, but if I said so how would you react if I said that the demand for oil is likely to decline in 2020?
Okay.
What do you think will happen to? So what do you do then when you hear that?
I can react to that because
this wasn't to set you up. This was actually to now you have knowledge to figure out. Okay, but I can tell you the answer. I'm not here to put you to be bad to you. So if I hear that the oil demand is decreasing for 2020, I know then that CAD. Let me move. I like to move it. I like to move it. So if oil is down, that was oil. it's down. Then I know that CAD, Canadian dollar, is down. I know that Aussie, AUD, is down. I know New Zealand dollar is down. I also know that USD is up. Yen is up. And Swissy is up. CHF.
Okay.
Just because the demand for oil is lower. Okay? This doesn't necessarily affect the oil specifically, but this has an impact on the, what do you call it, the growth sentiment of, are we going to increase growth, be stable, or lower? Oil has a relationship to growth. The more oil demand, the more demand for oil, the higher the growth. Because the more demand for oil, that's because of more demand for transportation, more demand for goods, more production, more transportation of people. We would also then have more money to travel. So that so the whole world kind of is linked to oil. And so when you have a decrease in oil demand, we have less production, less transportation, less, then CAD will fall. Aussie will fall because they send iron ore and coal to China, which uses that in their production. That sends it to Europe. New Zealand, same exporter. So these things are exporters, and then USD, yen, and Swissy is safe. Okay. So you buy CAD Aussie New Zealand once you get return on your investment adjusted for the risk. Okay. So right now you don't get your returns because the economy is slowing down. For example, right now, right now. So you wouldn't buy. Yeah, you wouldn't. There's less demand for oil. There was less demand for production and transport. There's no transport at all of passengers now. And it's, of course, there is something, but very much
flights
less.
And everything.
Yeah, so many flights are canceled, and that's just how you casually can look at, okay, how is it going out around the world now? So once you start selling your assets in CAD, Aussie, and New Zealand, what do? You still have money. You got your profits back. What do? You put it into America. Because America gives you, at the moment, around 1% on your investment. 1%. But it changes every day. But that's better than -40. So what you choose? To be 1% in profit or lose 40% of your assets value?
I'll be like 1% in profit.
Then you go to America. That's why everyone bought the dollar, because they wanted 1% return instead of losing 30 or 40%
of his assets or anything.
So this is real life. This is actually the full stock market. I guess I can't remember right now. I think it was like 30 or 35% loss from the top in January.
Can I ask you something? Like, how do you come up with this fundamental knowledge and how the interlinkings with each and, as in, like, right now you showed me that if the oil is down, so the Canadian dollar, Australian dollar, New Zealand it goes down, and so how do you like come up with that knowledge, with the fundamental of all the whole process of these markets, how everything is interlinked? And it's like you explained me right now, I understood that, but to gain more of it, to see, how do you, like, can you advise me?
Real life examples. 1st of January 2020-ish, 31st then. Right? This is the Canadian dollar index. Okay? I would say this is falling. This has fallen quite greatly.
Yeah.
Right? So that's, you know, it's not like, yes, it's not hocus pocus or whatever you call it in English. That's 11% fall. Okay. So in the same period, I will look at the same period, but then for Australia. Okay.
Okay.
Australia has then in the same period fallen 18%.
Okay.
From the top to bottom. Of course, it's not now, but from the top to bottom. Right? Then we can go to oil. Right? Just check if my what do you call it, allegations was true or wrong. 1st of January, 31st-ish. To the low, that is 68%. In the same period, in this small analysis, CAD and Aussie has fallen together with oil.
Okay. Yes. This is how you.
It's not like, yeah, of course I've been told to look for this one. Of course I've been told. I have listened to YouTube. But you don't need to find it for some. You can just analyze it, or what do you call it?
Okay. Yeah.
Observe it. Observation. Take notes, and see if it's true. Again, in the future. Yeah.
Okay. Yeah. That's how you came up with fundamental knowledge.
Yeah, of course it's through YouTube and listening and Googling and reading a lot of newspapers and a lot of news articles and whatever you can find on the internet. But yeah, central bank reports, central bank websites, they tell you everything.
Okay. Okay, I need to learn this. I need
and
to study
technical
this.
analysis, I just, you know, okay, is it true? Does it have anything, what does it have any truth, what they're telling me? And then I can also just say, okay, since they now are connected through our small observation, I would then trade them together. So if I am shorting the Aussie, I can also short CAD.
Yes.
Kind of. Not entirely, not 100%, because this one fell more than the Aussie and the CAD, but yeah, fine.
Okay.
And then at the same time, just having a small one here, I think yen. I said yen was going up, did I? In the same period. So 14. This one is a bit different apparently, but it has risen 7% in the same period. Now it's back to square zero apparently, but yeah. In this, you can see it. Sorry. In the same period, yen has risen 7%.
Okay.
From high, from the bottom to the high. And now it's back down again, but yeah, still. I said Swiss has risen in the same period. And of course, when I say it has risen or it rises, of course, it's just a hypothesis. Everything that I say is a hypothesis until it's proven right or wrong. So if I say that I'm going to sell January, February, March, April, I still have to wait for the trend to go down if I'm selling, right?
Okay. Yeah.
It's not like the bus